Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. In today's class, we are going to understand the financial statement of banking companies. We know we are preparing the financial statements. Why we will prepare financial statement? To know the financial position, to know the financial performance, and to understand the progress. We are preparing the financial statements. The banking companies also prepares financial statement as per the Banking Regulation Act 1949. Let us understand in detail how the banking companies prepare these financial statements. As per the Banking Regulation Act 1949, section by 5 class C, banking company means any company which transact the business of banking in India. Section 5 clause B of the Act defines banking as the accepting for the purpose of lending. This is the main function of the bank. You need to understand here why they will accept deposit for the purpose of lending and or investment deposit of money from the public, repayable on demand or otherwise, and withdrawal by check, draft, order, or otherwise. So this is about the banking. And the main functions of bank is divided into two: primary functions, secondary functions. What are the primary functions? The primary functions are accepting the deposit. See, they need fund. How they will generate? By accepting the deposits and granting of loans and advances. How they will use? Granting of loans and advances. Here you can see, here also they will earn, they'll pay interest, and here they will receive interest. The bank profit will be the difference between interest paid and interest received. They will accept the deposit. There are different types of deposits: saving deposit, fixed deposit, current deposit, recurring deposit, and granting loans and advances. There are some of the loans and advances, that is bank overdraft. This facility is given to the business purpose, right? Current account holders, they will get this benefit. When they don't have a sufficient balance, still they can withdraw the amount, and whatever the amount they have withdrawn, for that interest will be paid. That is bank overdraft. Cash credit is also one of the loan which helps to meet day to day working capitals. Loans, discounting the bill of exchange, and secondary functions are agency function, utility functions. Agency functions are transferring of funds from one branch to another branch, one place to another, periodic collections like dividend, salary, pension, then periodic payments, making payments of rent, electricity bill, collection of checks from the customers, then portfolio management, other agency functions. So these are the functions of the bank. Let us understand now how the financial statement will be prepared in the banking companies. Here, the profit and loss account for the banking company is there. We have schedule. Schedule number 13, 14, 15, 16 will be covered under profit and loss account. Why we will prepare profit and loss account? To know the net profit or net loss of the company. Here, the first head is income. Income means what? See, you have to see on behalf of the bank. In the bank side, if you stand, you will understand what is the income to the bank. Interest earned will be income to the bank, right? Interest earned and any other income. Interest earned comes under 13. What are comes under interest earned? See here some of the items which are covered under the interest earned. Interest and discount earned. Interest on loan. Loan you have lent, for that you are receiving interest from the customer. So it is an income to the bank. Interest on cash credit. In discount on bills discounted. Interest on overdraft. And any rebate on bills discounted you have provided, that should be deducted. Then interest on investment, interest on RBI deposits, and any other interest will be recorded under the interest earned. Then we have other income. The other income is some of the functions, agency functions you have seen. No? The functions, secondary functions, whatever they have provided, on that they will receive income. That will be called as an other income. Commission, brokerage, exchange, profit on sale of investment, profit on revaluation of investment, profit on sale of other assets, income by way of foreign exchange, income by way of dividend on investment, total other incomes. Then we have expenditure. Now, interest earned is an income. Interest expanded, that is, whatever the interest you have paid, it will be your expenses. The interest expended comes under schedule number 15. The schedule number 15 covers interest on deposit. Why they will deposit in the bank? To get an interest, right? So bank is paying interest to the customer. So it is for customer it is an income. For bank it is a expense. Interest on fixed deposit, interest on saving deposit, interest on current account, interest on borrowing, any other interest paid. All this comes under interest expanded. Then we have schedule number 16, operating expenses. During the work, any expenses occurs, that operating expenses, salary, rent rate, printing and stationery, depreciation, director fee, audit fee, law charges, postage and telegram, advertisement and publicity, insurance, establishment expenses, sundry charges, repair and maintenance, other expenses. All these comes under the operating expenses. We have provision and contingencies also. The provision and contingencies are provision for tax, bad debt written off, provision for doubtful debt. If in case given, that will be recorded. Okay. Now, from A, if you minus B, you will get net profit or loss for the year. And if any brought forward profit or loss is there, if profit you are adding, if loss you are deducting, then you will get total profit or loss. Then you need to go for appropriation. As per the Banking Regulation Act, on your profit, not on total profit, on your current profit, whatever you have recorded, on that 25% should be kept on the statutory reserve. Okay. Then any other reserve in case given in the question, that should be recorded. Transfer to government proposed dividend, balance carried over the balance sheet. Then you will get total profit for the current year. Then let us understand the balance sheet. Here the schedule number 1 to 12 will be covered. Here the for schedule number 1 is capital, that is share capital. In the share capital, you can see the share capital, and if subscribed capital is given, that is part of the capital, that will be recorded. Then schedule number 2 is reserve and surplus. Here, the reserve, statutory reserve, whatever you have recorded in the profit and loss account, that you are recording. Then capital reserve, any other reserves are given in the trading trial balance, that should be recorded. Share premium, revenue reserve, profit and loss account, surplus, whatever you have recorded, that should be added. If it is a surplus, then you are adding. If it is deficit, you are minusing. Then you will get total reserve and surplus. Then schedule number 3 is deposit. All type of deposits comes under schedule number 3. Demand deposit, saving bank deposit, term deposit, recurring deposit, current deposit, all the deposits you are recording under schedule number 3. Then schedule number 4 is borrowings. Borrowings, you can borrow from other bank or you can borrowing from outside India also. Whatever you have borrowed, that should be recorded under the borrowings. Then schedule number 5 is other liabilities and provision. Other liabilities and provision. The other liabilities and provisions are bills payable, branch adjustment, credit balance, interest accrued, other pension fund, unclaimed dividend, rebate on bills discounted, provision for taxation, proposed dividend, provision for doubtful debt. All these will be recorded under the other liabilities and provisions. Then you will get total other liabilities and provisions. So this will be your liability side. Then comes to the asset side. In the asset, the first schedule is 6. Cash and cash in hand with RBI. So that should be recorded. Cash in hand, cash with RBI. Both you are showing under cash. Then schedule number 7 is cash with other banks and money at call and short notice. Whatever it is there, money at call and short notice, cash with other banks if you have, both should be recorded under the schedule number 7. Then schedule number 8 is investment. Investment in government bonds, golds, bullions, other investments, whatever investment you have done, that should be shown under the schedule number 8. Then schedule number 9 is for advances. Advances and bills discounted and purchased will be recorded under advances. Then schedule number 10 is fixed asset. Fixed asset, here you are showing fixed asset. From that you are minusing the depreciation. Depreciation, if you minus, you will get the net assets, that should be recorded. Then schedule number 11 is other assets. Other assets are branch adjustment, interest accrued on investment, tax deducted at source and paid in advance, non-banking asset, other silver bullions will be recorded under other asset. Then schedule number 12 is contingent liability. This will not be added to the balance sheet, but you have to show it in the balance sheet. Acceptance and endorsement, claims by employees for bonus. This will be shown at the end. After total asset, you are showing the contingent liabilities. So let us solve now question from 2025. Okay. Meenakshi Bank Limited requires you to prepare profit and loss account balance sheet as on 31st March 24 from the following details. Here you can see whatever items comes under debit side and expenses will be debited. Okay, assets and expenses will be debited, incomes and liabilities will be credited. So that you need to observe. Okay. Share capital 1 lakh equity shares of rupees 10 each, reserve fund, loans, cash credit and overdraft, premises, investment in government securities, current deposit, fixed deposit, saving bank deposit, salary to staff, director fee, rent rate and taxes, general expenses, profit and loss account. 1st April 2023, this is brought forward. Profit, it is their credit side, so it is profit. If it is their debit side, then it will be loss. Interest and discount, then stationery, bills purchased and discounted, interim dividend paid, recurring deposit, shares. Shares is given here debit side, so it is an investment. Cash in hand with RBI, money at call and short notice, total. And there is additional information also. The additional information are endorsement made on behalf of customers, total rupees 1,15,000, unexpired discount amounted to rupees 380, interest accrued on investment rupees 8,000. Now, first we will prepare the profit and loss account. For profit and loss account, schedule number starts from 13. Schedule number 13 is schedule number 13, interest and discount. In the question you can see where are the interest are given. Interest and discount is given. It is given in the credit side. So it is an income to the bank. That is interest and discount. Interest and discount 2,56,000. There is an adjustment for this interest. Interest accrued on investment rupees 8,000 is there. That should be added. Interest accrued 8,000. What is the total? 2,64,000. From this, you need to minus unexpired discount. Unexpired discount. It is also given in the adjustment. It is 380 minus 380. If you minus, you will get 2,64,000 minus 380 is 2,63,620. There is no other adjustments. This is total of schedule number 13. Then we have schedule number 14. Schedule number 14 is what? Other income. There is no other income. It is nil. Then we have schedule number 15. Interest expanded. Interest expanded. Interest expanded. There is no other interest expanded. Only interest received is there. So it is also nil. Then schedule number 16. Operating expenses. We have many operating expenses. Here you can see salary to staff, director fee, rent rate and taxes, general expenses. All this comes under the operating expenses. Salary to staff. It is 56,000. Then we have rent, rate and taxes 4,600. Director fee. Director fee 3,600. General expenses 54,800. Then we have any other expenses? Stationery is there. Stationery is 17,000. Stationery 17,000. We don't have any other expenses. Total operating expenses is 56,000, 4,600, 3,600, 54,800, then 17,000. Total 1,36,000 is the total operating expenses. Now let us prepare the profit and loss account. Profit and loss account for the year ended 31st March 24, particular schedule number amount. What is the first heading? First heading is income. Under income we have interest, interest earned. Interest earned we have calculated what is how much it is 2,63,000. Schedule number 13 2,63,620. Then we have schedule number 14 other income, other income 14. We don't have any other amount. Then total income is 2,63,620. Now the second part is expenses or expenditure. Under expenditure, here schedule number 15 is interest expanded. Interest expanded. Schedule number 15, we don't have any other expenses. Then schedule number 16 is operating expenses. Schedule number 16. That is already we calculated 1,36,000. 1,36,000. Total expenditure. This one we will call it as A. This is total B. Total B is 1,36,000. Now profit or loss. Profit or loss. Net profit or loss for the year. For the year A minus B. A minus B is 2,63,620 minus 1,36,000. 1,27,620 is the profit. Now we have profit brought forward. Profit loss brought forward. Brought forward. Brought forward is here you can see. Brought forward profit and loss 32,000. 32,000. Add these two. Plus 32,000. It is 1,59,620. Now we'll go for appropriations. Appropriations. Under appropriation, what is the first appropriation? transfer to general reserve. See, you'll make mistake where no, you'll take on this amount 25%. That is wrong. You should not take it. This you got after adding the previous profit. What is your current year profit? It is 1,27,620. On this you have to take it 1,27,620 into 25%. Okay. 1,27,620 into 25% is 31,905. Right. Then we have interim dividend. Interim dividend. Interim dividend paid is 34,000 it is. 34,000. Then we have any other adjustments? No other adjustments for the profit and loss account. So the total will be 1,59,620. This is your profit transfer to balance sheet. Balance sheet, that is from 1,59,620 minus 31,905 minus 34,000. 93,715. This you are showing in the general reserve. That is why profit transferred to balance sheet. Now let us prepare the schedules for the balance sheet. Okay. Share capital. Schedule number 1. Schedule number 1 is share capital. Share capital is how much? Share capital 1 lakh equity shares of rupees 10 each. It is 10 lakh. No other adjustments. Total capital is 10 lakh. Total capital. Then schedule number 2 is reserve and surplus. Reserve and surplus. Reserve and surplus. What are all the results we have? First we have statutory reserve. Statutory reserve is how much? Whatever we have shown in the profit and loss account, that is 31,905. Now we'll see what are the other reserves we have. That is reserve fund. Reserve fund 5 lakh. 5 lakh. Then profit and loss account. Profit and loss account. It is 93,715. This amount 93,715. Now total. No other reserves are there. Let us take the total. 31,905 plus 5 lakh plus 93,715. Total 6,25,620 is the total of the reserve and surplus. Then schedule number 3 is for deposits. Deposits. So what are the deposits we have? Fixed deposit, saving bank deposit, current deposit, and we have any other deposits? Recurring deposit. Totally we have 4 deposits. Let us record that one. Fixed deposit. Fixed deposit. How much it is? 2,50,000. Then saving bank deposit 1 lakh. current deposits 2 lakh. Then last we have recurring deposit 40,000. Total is 5 lakh 90,000. 5 lakh 90,000. Then we have schedule number 4. 4 is borrowings. There is no borrowings, so it is nil. Still, you have to show the schedules. Schedule number 5 is other current liabilities and provision. It is only liabilities and provisions. Liabilities and provisions. What are the we have? Unexpired discount we have. Unexpired discount 380. Total 380. Now all 5 whatever comes under the liability side we have recorded. Then schedule number 6 is cash. Cash in hand and with RBI. With RBI. Cash in hand is how much it is? Cash in hand it is 3 lakh 86,000. Only one we have 3 lakh 86,000. No other adjustments for cash. 3 lakh 86,000. Then schedule number 7. 7 is cash with other bank and money at call and short notice. Short notice it is there. You can see money at call and short notice 1 lakh 60,000. Money at call and short notice. Short notice is 1 lakh 60,000. Cash with other bank it is not there. So total is 1 lakh 60,000. Now schedule number 8. Schedule number 8 is investments. Under investment we have investment. You can see investment in government securities 8 lakh, and we have shares, that is also investment 1 lakh. Total 9 lakh. Investments in government securities 8 lakh, shares 1 lakh. Total 9 lakh. Then schedule number 9 is for advances. Advances we have loan and cash credit. Loan and cash credit is 5 lakh 70,000. 5 lakh 70,000. One more advances we have bills purchased. Bills purchased is 92,000. What is the total? Total is 5 lakh 70 plus 92 is 6 lakh 62,000. 6,62,000. Then schedule number 10 for fixed assets. Fixed assets, we have only one fixed asset we have, that is premises, 1 lakh. There is no information about the depreciation, so we are taking as it is, 1 lakh. Then schedule number 11 is for other assets. 11 is for other assets. We have any other assets? Let us check. Interest accrued is there. Whatever given in the adjustment should be treated twice. See, this also we have shown in the liability side and in the income, right? And this also we have shown in the profit and loss account as well as now in the other assets. You have to treat it twice. Keep that in mind. Okay. Schedule number 11, other assets is interest accrued on investment. Investment is 8,000. No other adjustments, 8,000. Then last, schedule number 12, that is contingent liabilities. Liabilities, endorsement of, it is given in the adjustment, endorsement on behalf of customer, 1,15,000. First adjustment, 1,15,000. This we are showing after the asset total, just for showing, not considering for totaling. Okay. Now let us prepare the balance sheet. Balance sheet of Meenakshi Bank Limited as on 31st March 24. Particulars, schedule number and amount. We have prepared already, all the schedules is ready. Now only we are transferring these amounts to the balance sheet. So what is the first heading is capital and liabilities. Capital and liabilities, under that first is share capital. Share capital. Share capital is how much it is? Schedule number 1, 10 lakh. Then schedule number 2, reserve and surplus. Reserve and surplus, schedule number 2, it is 6,25,620. Then schedule number 3, deposits. Deposits, schedule number 3, it is 5,90,000. Then schedule number 4, borrowings. Borrowings is schedule number 4, nil. Then schedule number 5 is other liabilities and provision. And provision is schedule number 5, 380. Now total of liabilities. Total capital and liabilities. Capital and liabilities is 10 lakh plus 6,25,620, 5,90,380. It is 22,16,000. Now assets starts from schedule number 6, cash in hand and with RBI. Schedule number 6, it is 3,86,000. Schedule number 7 is cash with other bank. other bank and money at call and short notice is schedule number 7, 1,60,000. Then schedule number 8 we have investments. Schedule number 8, 9 lakh. Schedule number 9, advances. After preparing schedules, it is very easy. Just you are transferring 6,62,000. Then schedule number 10, fixed assets. Schedule number 10 it is 1 lakh. Then schedule number 11 is other assets 8,000. Now total assets is, our balance sheet should get tally now. 3,86,000 plus 1,60,000 plus 9 lakh plus 6,62,000, 1 lakh plus 8,000. It is 22 lakh 16,000. Balance sheet tallied. And last item, schedule number 12 is contingent liabilities. Liabilities 12, 1,15,000. I hope you all understood. First, we have prepared all the schedules, and schedules we should start with schedule number 13, profit and loss account. 13, 14, 15, 16 comes under the profit and loss account. Income minus expenses, we will get profit, and to that profit, brought forward profit or loss should be added. Then we need to give an appropriations. In appropriation, 25% should be given to the general reserve on the current year profit. Any dividend or anything is there, that should be considered. Then profit transfer to the balance sheet, that is balancing figure. Then we are preparing the balance sheet. It starts with schedule number 1, share capital. Then reserve and surplus. In reserve and surplus, whatever the statutory reserve 25% we have given, that should be considered, and profit and loss balancing figure should be considered. Any other reserve should be added. All the deposits comes under schedule number 3. Borrowings, any borrowings of banks is there, means that should be considered under schedule number 4. Schedule number 5 is for other liabilities and provisions, that is unexpired discount. This should be treated twice. First, we are deducting from the interest and discount, schedule number 13. Then again, we are showing in the other liabilities and provisions. Any adjustments, all the adjustments should be treated twice. Then cash in hand comes under schedule number 6. Cash with other bank and money at call notice comes under schedule number 7. 8 is investment. 9 is advances. 10 is fixed asset. 11 is other assets. Then contingent liabilities will be shown under schedule number 12. Now, based on the schedules whatever we have prepared, that amount should be recorded in the balance sheet. Our liabilities are tallied to the asset. Contingent liabilities we have shown separately. Thank you for watching. Have a great day.